So
ping pong.
if I don't have the money or even the 20%, is that where you come in with the funding?
Yeah, you need 15 grand. Boom.
Because you're gonna need something. Most people are in a position where they don't have access to the capital for the most part. That's from what I know.
63% of people don't start.
So are y'all saying that I can not have any, maybe not, well, any money? Say for instance, there's $100,000 building, and the bank is requiring me to put down 20%, which is $20,000. It's going to be a great investment. If I need $20,000, which is the 20% of the purchase price, I can come to you and get $20,000?
Yes. You can come to me to get $20,000. I would rather you. Well, I ask you, would you rather spend somebody else's money instead of your money? If I said, David, all right, I got $20,000, just give me back $200 a month, and I'll let you borrow $20,000. Would you say yes to that?
Kind of depends, bro.
And I said I'll give it to you for 0% interest for 12 months.
But why would you do that?
Come on, David,
because that's what the bank does. So take advantage of it.
He thinking that you're gonna mess up and not make that money back in a year, and then your interest rate go to 20%, 30% on a credit card.
So is the strategy
they betting against you?
See now, who is going to qualify for a 0% interest rate credit card? Somebody with amazing credit, right? Somebody with amazing credit is not going to need to go to a gentleman who's going to now charge them 20% of the money that he helps them get in order so they can pay back that money. See, what he's not telling is what happens to all of the money from beginning to end. So yeah, I can come to you and get 20 grand, but you got to qualify for 25. So I'm going to take 5,000 off the top. You owe me that 5,000. So you came to me for 20. You left with 25. I left with 5. You operating on 20. Now you take that 20 and now you qualify for your hard money loan. We're not talking about buying real estate to live in, y'all. Y'all got to understand there's a difference between investment property and residential property. They look the same, but when the bank knows your purpose is different, it costs different. It's far more expensive to invest in real estate for flipping or even for holding as a landlord than it is to just buy a property and live in it. It ain't the same game. So he's now going to have to go to the hard money lender, give them the 20 grand so he qualifies for their 100. They'll give him the 100,000 back. Now, not only did he pay that man $5,000, but he's going to pay anywhere between 9 and 13% on that hard money loan until he finishes flipping it, in which case he better be able to qualify for a refinance or he better be able to get rid of that property. They're not finishing it.
So the strategy for the bank is betting against you in terms of they're saying, I give you 0% interest for 12 months,
that they lend money to.
but I'm betting that in 12 months you'll still owe me money.
When they give you a credit card.
For the most part. And some people get in that predicament, but you got to be smart and make quicker plays. But you also too are going to make money while you're spending money too. I like that concept too. Instead of spending cash, when we spend money off our credit cards, what do we get? Cash back or rewards points. Everybody likes to travel. Everybody like to make money when we spending money. I would rather us make money while we spending money instead of making nothing off every dollar we spend.
That makes sense.
No, it don't.
So let's say I pay my bills, credit's good. Give me like the 3 most important things that you need to guarantee. Well, you can't guarantee. I'm not going to say guarantee on this podcast. But you can pretty much ensure there's a good possibility that you'll be able to get them 20, 30 grand to invest. And
he'll get you the money.
Is this on a credit card?
Yep.
That you got to like liquidate and then go buy this property?
So for the most part, it's just really 2 things. It's properly structured LLC, because a lot of people structure their businesses improperly. And it's the requirements on the personal side. So once you meet the 680 to a 700 credit score, no negatives, a built mixture of credit report, because a lot of people do that wrong as well. It's literally those 2 components. And then
a built mixture of credit on your credit report. Let me explain. A good mixture of credit is one long-term loan, which is a loan that's typically over 60 months. a short-term loan, which is a loan that's anywhere between 12 and, I don't know, let's call it 36 months, right? Everything in between that time frame is kind of like a little iffy, but that's just for general purposes. And then you need a few revolving credit lines, right? So you need revolving credit, you need installment credit, short-term and long-term, in order to be able to come to this man for him to charge you 20% on money that you could have just, with your 680, 700 credit score, gone to the same lenders and got for free. I like this game plan.
Good. I mean, you said for credit cards or loans, I typically don't even go for loans. I literally go direct.
You can't qualify for them. That's why loans actually require documentation. See, when I first opened up my LLC, Boss Empire, which was for my t-shirt business back in 2017, I got that. And then 2 months later, I went to American Express. And because of my personal credit and my personal income, was able to qualify off the rip for two $25,000 business cards from American Express, which were not charge cards. These were actually cards with credit limits. 0% interest rate for 12 months on both of those cards. That was with my phenomenal credit and good income at the time. This was before the pandemic. This is while we're not really in a recession. This is while inflation is not all crazy. These dudes are still pitching information from 2015, 2016, 2017. Because this is what's been pitched to them at Recession Proof Extreme. It sounds amazing, but a business should be going after business loans, which cost a lot less and offer you a fixed payment and a fixed set amount of payments. A business loan can't really get out of control as long as you can have a business that can meet that minimum requirement. But when you start stacking credit cards and your credit ain't A-OK, I promise you the dudes that he's getting this funding for are not qualifying for those 0% interest rate credit cards. They're qualifying for credit cards for 17 to 24, maybe even 29% interest. And they're still pitching the fact that you're going to be making money while you're doing this. Bro, you better be sprinting your ass off. Because when that first bill comes in at 17 to 29% interest and your business hasn't gotten off the ground yet, where are you going to get the money to make that first credit card payment? That's always going to be my question. Should I have been running a podcast that they're on? That would have been my question. Walk them down the path of what happens when. Because my scenario is the common scenario. His scenario is the exception to the rule.
Directly to credit cards because it's easier to get approved. If you want to get a $200,000 loan, you want documentation, you want tax return, you want bank statements or check stubs, something like that.
Yeah, proof that
I can go in the bank and get $200,000 over small increments with no documentation, no paycheck stubs, no tax return. And most people are not in position where their business has been open 2 years. So if your business has been open 2 years, you don't have no tax return, you don't have no bank statements and all that stuff. Now you have an entry level where you can get the money at a quicker fashion.
I want to pull this up real quick. And actually my home, the person he was talking about was actually here, and it was really, really funny. Let me find this real quick. Okay. So, and I want to hear your response to this. So Kevin on stage made a video, and this is what he said. Let me show it. Let you listen to it. It says,
saw something on the internet. This lady said you can start your LLC, get your free EIN number, and walk into the bank and get $30,000 without any documentation. Yes, you can. If you have a gun and you rob the bank. I don't think you'll get $30,000, but you'll probably get $3,000 and go to jail. Anything other than that, it's not possible. I'm sorry, guys. We have to work. We have to work. We have to work. We gotta work. People gotta work. We gotta work. That's the way it is. People gotta work. You gotta work. They're not giving you $30,000.
Wear them out, Kev.
You're gonna be at work.
Wear them out, Kev.
And the only way that you can start a business and go get $30,000 is walking into a bank with a gun.
Gun and ski.
What say you?
He said, it sounded like he said with your EIN only.
Well, so this I'm going to tell you what Lex said. This is what Lex said. I'm going to show it to you one more time.
Yeah.
Also on the internet, this lady said you can start your LLC, get your free EIN number, and walk into the bank and get $30,000 without any documentation.
Stop. Yeah. he's only he's only mentioning you getting the LLC and the EIN number, which 100% he's right that you can't go get 30,000. I'm saying to leverage the personal with the LLC. Now it's a whole different ball game. I can start my.
I think that's what she was saying too.
Yeah. I can start my LLC 2 days ago, and be able to still get access to $50K, $100,000 by leveraging my personal side. So it's personal guarantor. You go in the bank, they ask you to personal guarantor, meaning we can pull your personal credit to see how good it is, but we're going to approve you for this amount on your business side to be able to get you the money. So then it also only reports on the business side. So we don't have to worry about if it's going to report on our personal side, which we like that. That's why we love the word business credit so much, because we can leverage the business to do it. It's going to report on our business side. And we don't have to so much worry about utilization now. So on the personal side, when we start, maxing out our credit cards, credit score go down, we can't get access to no more money. We leverage the business side when we get approved for the business credit cards to invest that money so that now we can continue to either get access to more capital and continue to keep investing.
So Kev is wrong in his assumption.
To what he said.
Y'all know Lex?
Lex. I know Lex.
Because I think she's saying the same thing. I mean, obviously, she's like, yo, you can start a. Obviously, there's like more stuff to it. Like you actually.
Little pieces.
You got to find a bank, maybe one of them to not.
Say, hey, what do you got?
Hold on.
Guys, is no doc product. We go after no doc money, so no documentation. Okay. We'll call a credit union in our zip code, so we can search our zip code, call a credit union, and say, hey, what do you guys is no doc products that you have? So like, what's the limits of up to what you always would approve us for with no documentation? Mm-hmm. Oh, if you ask for more than 50,000, we're gonna ask for documentation. Okay, great. All right. Mm-hmm. I'm gonna come in the bank and I'm gonna say, well, let me just get like 45,000. Let me try to get approval of 45,000. Mm-hmm. If that thing say approved, I don't have to show no documentation. It's stated income. Mm-hmm. So it's based off what I projected to make, or I'm gonna make, or what I make, whatever the case may be. Now I don't have to show no tax return, paycheck stubs, bank statements. I get this approval, I'm out of there. 30, 40, 50,000. No documentation. That's just one bank. And then we go to 10 more. When we PG in these things and they're pulling our personal credit, they're going to give us an inquiry. So most people worries are, man, we're going to get too many inquiries. They're going to stop approving us. So imagine this. We go to the bank. We get a Chase business credit card. That's one inquiry. We go to 5 more. We get 5 inquiries. Okay, well, now we got 80K, 100,000. All these inquiries on the personal side is not attached to anything. We remove all the inquiries. What are we going to do now? We're going to take the inquiries off, then we're going to do it again. Round 2.
Man, I'm just thinking about, I'm multiplying my head, like, how many times I'm going to go do this?
No, for real. No, seriously, though, for real. So that's how we run it, though. And then that's how we run the bag up. So that's how I think I got over 750,000 in credit now, man. We go after no doc money, so no documentation.
This is the same dude that's sitting on this podcast right now. It's the same dude. Now, you do realize he understands David is like smarter than your average podcast host. He's actually asking some probing questions. Should this man start to get sensational like he did on the Finessers Only podcast, David has no choice but to bust that ass wide open on public platform. So he real low key now. He real low key on his public podcast. This is not the one for me. I'll save this for the other ones. But as you can see, this man just told you that all you got to do is call up every credit union in your local area and run up the bag, because the people at the credit union don't have anybody smarter than him running their actuarial processes, which is the process telling them what risk versus what reward the bank needs to be at to make money make sense, make lending money make sense. I'm going to tell y'all right now, you guys try to run this play, you're going to be sorely, sorely disappointed at the amount of funding you do not get. This is the same man. See, y'all say y'all don't want this type of information, and that's cool. But I'm going to keep giving it, because it's important for me to show y'all who those dudes really are when they're forced to explain the whole thing. Lay it all out.